Hello everyone and welcome to Crypto Signals. Today we see how a signal is interpreted in the cryptocurrency market and how trading is done on the Binance platform. As we can see here, we have an example signal. In the first part, we can see the couple pairing between Algo and USDT, which are the two acronyms of two currencies, Algorand and Tether, which is a fixed currency on the US dollar. In our Telegram group, you will receive two types of signals, one based on Tether or Bitcoin. So the pairs could be Algo and USDT or Algo and BTC, Bitcoin. Then we will find the buy, or rather the market range in which we will be advised to buy Algo. Bear in mind that you won't have to go over or back these two numbers. So buying at a higher price of 1.54 will not be as useful as it will not be worth buying at a lower price. Below we will find the sales target. Starting from target 1 up to target 5, these figures will serve us to set up trading. Obviously, if we position ourselves on target 1, we will be more likely to close, while moving forward on target 2, 3, 4, and 5, chances will decrease. Finally, we will find the stop loss, the loss margin, which, if touched, closes the trading in negative and will repair us from much greater damage. Let's move on to the practical example and let's see how to trade with the signal on Binance. Here we are on the Binance application. We will go to the spot markets and look for our pair of coins with which we want to trade following the signal. Then we look for Algo or USDT and select it. Below we go to buy and this screen will appear. On our right we will see signs in red and signals in green that are the purchase and sale of this cryptocurrency. In the middle we will find its current price, which we will need to understand if we are within the buy range. So now this is an example, but if we return between 1.54 and 1.49 of the previous signal, then we can continue with this trading. If the value will be higher or lower, we would have lost the signal. On our left, we must go to select the market order. So we will go to buy the cryptocurrency directly without any limit. Below, we will enter our purchase amount. If we want to buy it 100%, just click on 100% immediately and enter our total. We buy Algo. After we bought it, we will go to the sales section and set, instead of the market, we set the OCO option. Here we will see the limit and the stop limit. On the limit, we enter our target. So 1.5862, which is our target, 1. We can also enter target 2, 3, 4, 5 based on what we want. Below, we will put the stop loss. Taking, for example, the previous signal, I put 1.44. And in the limit, I put 1.33, 1 decimal less than the stop limit we've put above. This is because we have set up orders in OCO. Why OCO? Because OCO is one cancels the other. Then send two orders of the same quantity at different price levels on the same market. This order allows us to potentially lock in profits with a favorable move, to prevent a bearish loss without having to constantly monitor our position. An OCO combines a stop loss order with a limit order in a nutshell. In trading, an OCO is an instruction given when two orders are placed at the same time. If one part of an order on a security is executed, the other part is canceled. This order is also referred to as an alternate order and will allow us to further minimize our losses. Once this is done, We will go to Sell Algo, and below we will see our 2 order receipts, which we hope will go through. On to the next video, and thank you guys. Bye.